Today we review a $3.9 billion stock portfolio. Ladies and gentlemen, put your hands together for Bill Ackman. If you don't know who this is, well, he's not nearly as famous as Steve Eisman. If you don't know who Steve Eisman is, well, where have you been? He was famous for The Big Short, making billions of dollars, shorting the financial crisis. And Bill Ackman was also a part of that insanity. If we go into his Wikipedia page under his career, we can learn that Ackman bought credit default swaps against MBIA corporate debt and sold them for a large profit during the financial crisis in 2007-2008. He reported covering a short position on MBIA on January 16th, 2009, according to the SEC. But that's not where I've learned of Bill Ackman. No. I'm a bit of a drama bug, and if we take a read a little farther, in 2003, a feud developed between Ackman and Carl Icahn over a deal involving Hollywood Realty. T Property Trust acquired Hollywood, paying 136.16 per share. Under the terms, Icahn owed Ackman investors about $4.5 million, but he refused to pay. Ackman sued 8 years later, and court forced Icahn to pay $4.5 million plus 9% interest per year since the date of the sale. And it wouldn't stop there. No, ladies and gentlemen, this moved into Herbalife, which I'm not going to spoil for you yet because that's part of the portfolio, which we're going to analyze. But where he really warms my heart is with his financial advice on deep diving and understanding companies. I even include this link to this video in my stock market investing course on passive income for dummies. And Bill Ackman is probably one of the most world-renowned investors for teaching people the basics of balance sheets and understanding companies. But in light of this, ladies and gentlemen, we're going to break down Pershing Square Holdings, which is Bill Ackman's $3.9 billion fund. And I look so forward to breaking all of this down for you. So let's just jump right into it. Welcome back, my passive income investors alike. This is the continuing a series of videos where I break down investors' holdings. I just recently did one on Kevin O'Leary. I'll leave the link in the description below. You can check that out as well. But we're going to hop right into this just by checking out Pershing Square Holdings as it comes up on my Scotia iTrade account, which we can see hasn't been doing that well over its inception over the last 5 years, ladies and gentlemen. And only recently has it really started coming back, but it pays a fairly healthy dividend, and it has an extremely low PE ratio of only 2.8. And if we take a look at their news, well, Pershing Square Holding exits United Technologies, which is the most recent thing, and they've been exiting a lot of positions. But we want to see their holdings. I mean, that's what we're here for, right? So taking a quick peek, guys, we're going to look at the contributors for 2018. Obviously, in 2019, things have changed. This is just the most recent information they have posted on their website. So taking a look, we're going to start with the contributors, and then we're going to look at the detractors, which is a weird way of talking about his short positions. But let's just start with the contributors, and we're going to go over these one at a time, starting with automatic data processing. Not 100% certain of what this company is capable of, but looks like it has been one of his good holdings from 2015. As we can see, the entire position should be up about 98%, which is absolutely incredible. This company also pays a 2.16% dividend yield, and it says automatic data processing, and commonly known as ADP, is an American provider of human resource management software and services. So that's one of his better holdings, clearly. One of his more interesting holdings that I totally agree with is Lowe's company, because over the last 5 years, Home Depot and Lowe's have been on a tear, ladies and gentlemen. The housing market has been on fire just as much as the stock market has. And yeah, we can see that he should be getting a really decent rate of return, including what should have been a nice healthy increase on a dividend. Now, probably you dividend investors out there are probably the biggest fan of this holding, which makes up Starbucks. Starbucks makes up a decent chunk of his holdings, and again, over a 5-year term, should done increasingly well. Now, the funny thing about his entire holdings is that he hasn't really made any money, yet all of these positions that he's holding long have done incredibly well. And I'm going to give you my personal opinion on where I think he's kind of gone wrong with his portfolio at the end of this, so do stick around to the end of the video. But moving into his final long position, ladies and gentlemen, Chipotle. Now, depending on how recent this position was, he might have done pretty well, considering anyone buying that food scare that happened. I don't know if you remember, people were getting salmonella poisoning from that Chipotle grill, and sure enough, the stock took a final beating of a low of right around, $250. Is that what that said? Yeah, about $255. And if you bought it somewhere down there, I mean, you're looking at a 200% return. You tripled your money. Ain't nothing wrong with that. I don't know how long he's held it for, though. So moving into his short positions, we're just going to scan through all of his short positions where things get really interesting. Ladies, gentlemen, we're going to start with the most controversial and one of the main reasons I ever found out about Bill Ackman, but that was his short in Herbalife.
As far as I'm concerned, the guy is a major loser. You know, this young man, I'd be happy if I could be assured of one thing in my life, is you are sure of everything. Then he talks about charity. That's complete. He's not giving it to charity.
Let me remind you that we are on live television, so that
I really sort of had it with this guy, Ackman. He's like the crybaby in the schoolyard. He was like one of these little Jewish boys crying that the world was taking advantage of him.
He claimed that Carl Icahn's position in Herbalife was similar to a Ponzi scheme, and it was one of those things where you had to get your friends to sign up, and if your friends get people, everyone makes money down the chain. I'm sure you've been to one of these things, you know, where you bring your juice boxes and you convince your friends, your Tupperware parties, to sell your friends Tupperware on some kind of prescription-based thing and convince them it's a business and get them to do Tupperware parties. And I don't know, it's a weird kind of like pyramid scheme, as they call them. But at the same time, it's probably been one of the worst short positions he's done, because, I mean, over the last 5 years, it has done nothing but go up. And it's quite funny, actually, considering it's a pretty profitable company with only a PE of 21. So interesting short. Moving into his second short position here, we got Federal National Mortgage Association. So it looks like he still has something out against these mortgage companies, and we can see there is some insane volatility in this guy. This looks like one of those companies that you'd want to swing trade, considering it looks like it does 100% movements fairly often. Like year over year, it looks like it's at least doing 50% pops, 20% pops here and there. Like, look at this. This is wild. So the Federal National Mortgage Association, commonly known as Fannie Mae, Fannie Mae and Freddie Mac, ladies and gentlemen, is the United States government-sponsored enterprise, and since 1968, a publicly traded company. And with a PE, oh my goodness, that's probably why we got so much volatility. We got a PE of 253. Gee, that's wild. Moving into the next short, we got Howard Hughes. I can see why he'd be shorting that, though. But Howard Hughes, we got a company here that Howard Hughes Corporation is a major real estate development and management company based in Dallas, Texas. It seems like Bill Ackman has something against the housing market. Same with, Steve Eisman shorting the Canadian banks. Steve Eisman's famous right now, guys, for basically wanting to short the Canadian banks. He's been really getting something about going with the Royal Bank and Canadian Imperial Bank, which are some of my holdings, to be honest. I hold Canadian Imperial Bank. But let's just keep moving forward here. But Howard Hughes, it begins as a part of an oil drilling tool business founded by Howard R. Hughes, sir, in 1913. Fairly high PE, though, at 45. Not as high as the last one. But let's take a look and see what else we got here. So Federal Home Loan Mortgages. Oh, man, these home shorts. The Federal Home Loan Mortgage Corporation, known as Freddie Mac. There we go. Freddie Mae and Freddie Mac. So same company, volatile as heck. And this one's not even profitable with no PE, ladies and gentlemen. And moving into the final short, Restaurant Brands International, Inc. Restaurant Brands obviously holds a bunch of companies, including Burger King, Tim Hortons. Tim Hortons is really famous here in Canada. I see it everywhere all the time. It's like not nearly as famous globally, but if you know Tim Hortons, consider slapping a like. We got Popeyes, Burger King. I also go to Burger King with my girlfriend. They offer a lot of coupons for you frugal people out there. Check them Burger King coupons out. And over 5 years, Burger King has substantially outperformed. So it's crazy that most of his short positions are up. So he's losing money, guys. He's bleeding capital left, right, and center. This poor bugger. So I'm going to give you my personal opinion on Pershing Square Holdings, and I want to start by saying we could take a look at the dividends, but before we take a look at the dividends, which only really equate to basically 40 cents a year, or that 2 point, whatever that percent was, what was it, 2.2% dividend yield, I want you to be reminded of the key information document here that says the one-off costs, ongoing costs, and incidental costs. This is where things get astronomical, which is why I will not give my money to mutual fund managers. But nonetheless, ladies and gentlemen, we got a portfolio transaction cost of 0.62%. Oh my goodness. The impact of the cost of buying and selling underlying investments for the product. Ongoing cost, 2.8%, which is more than the bloody dividend yield. The impact of the management fee payable to the manager and fees and expenses of the company's other service providers. And then finally, the performance fee of one which has been performing miserably. The impact of the variable performance fee payable to the manager equal to a maximum 16% of any gains. attributed to the company's fee-paying shares. Can you believe the greed in this friggin' payment structure for a company that has consistently underperformed the market for the last 5 bloody years? I would avoid this guy like the plague. Recently, Bill Ackman has been staying really under the table with Carl Icahn. So I mean, it's sad because I really enjoy the drama, ladies and gentlemen. I'm a bit of a drama bug, as I mentioned before. So I mean, I'm gonna continue keeping an eye out on this guy. I'd love to know what you guys think personally about Bill Ackman's holdings and his billion-dollar fund. It's some super interesting stuff considering this guy was a mentor to me, and it's crazy to think that I almost considered investing money with him. And it's always a fun reminder, ladies and gentlemen, that if we compare Bill Ackman to his arch nemesis, Carl Icahn's company, the one that owns Herbalife, we can see the 5-year performance literally isn't that much better, but the only difference, even though you'd be down 30% over the 5 years, you'd be collecting a 13% dividend yield. Oh my goodness. You'd be up about 25-30% if the dividend yield didn't increase, but we got a way better PE. We got a half decent PE ratio, but if we go over the max time of Icahn's entire history, he actually hasn't done that bad considering since 2000. I mean, we can see a total stock return of 651% plus an incredible healthy dividend yield, and heck, maybe some awesome swing moments as well. So it just warms my heart to get to always touched on the nostalgic past of the drama billionaires fighting it out on public TV. Always good reminder. I'd love to know what you guys think, as always, in that comment section below, and consider slapping a like if you're new here. Subscribe, guys. And again, if you want to check out some of our further ideas on passive income, check out Passive Income for Dummies. Again, all in the description box below. But stay cool, stay awesome. I look forward to chatting to you guys real soon.